Shavyfxhub, let's look at BTC and let's see what this pair is doing. Our focus on the line chart is the close of the body of the candle. That's a major focus. Forget about the weeks because we are dealing with litmus test. We want to know when buyers will change. Now you see BTC is trending on demand, right? So if for any reason price breaks away from the demand curve, it will ultimately be looking down 66, 65K. So market is tradable in zone. So at the moment now, the market is in demand zone. So all we are looking for our litmus test is to see when price will leave demand and enter supply. So if you leave demand and enter supply, drastically I will see it. We have been seeing it. We saw gold today, and he did exactly what we said. And we are seeing this one, and we are watching him. So let's see. But I tell you, I'm more concerned about the body of the candle. This is daily chart, body candle close line chart. It's part of our strategy. I didn't want to share it, but let's give all these things out for free. It will not, it can't hinder anybody from anything. I believe at the end of the day, someone is going to learn something. It will change how you view trade. Our concept is demand and supply. Every other grammar is withheld. So at the end, let's see if we get something tangible from this chart. Now this is the daily chart. Starting from April 2023, price created a demand structure, break of the demand floor, retested it, returned back, break of a supply roof, retest it, and Vala left off. And before price left, it didn't leave without notification. After creating a descending trend line, price always update, always, always update. It's not a coincidence. It's not manipulation. There cannot be any sickness without symptom. There is always, but it's we ignore. So look at what happened on the descending trend line. Price updated here, supply roof, building sell liquidity. All of a sudden broke out from the descending trend line of the sell liquidity, retested it, 1, 2 with a W structure left. And while it was doing that, it was also maintaining a demand floor. You can see the structure. You sell here, it suits you. You come here, you buy. You come here, you buy, it suits you. Come here, you sell. Just be doing this kind of childish thing. Finally, it took away all the sell idea. It took all of them away. The right thing to do when market is consolidating, in that either in a bearish descending channel or a bullish ascending channel, is to wait for a breakout. You must wait for a breakout, either from the roof or from the floor. And when you enjoy the ride too much, it's going to get you intoxicated. A lot of people were carried away. When price returned here, they were thinking the price will come back again. It didn't. And the reason it didn't come back is because we trade market structure. And if you look at the structure very well, you will find out that it wasn't meant to cross that level. Based on the structure of the market, let's put on our line chart and also show you why that joy didn't last forever. Because the market was also building a demand floor while it was also making option to go and update the roof. And that is the reason it didn't cross. If the market had crossed this zone, then it would have been an outright sale. It didn't cross here. This was what changed the trade dynamics. And if it had crossed here, it would have been going down. So they failed and upheld that level. So that demand floor held price. After price creating here a demand floor, it came down to update the normal floor, which everybody was enjoying. Everybody was enjoying it. Everybody was enjoying it. In fact, you don't need to be a trader. You just place your buy and it will go for you and you'll be excited. And then you come to the roof, you sell, and you'll be happy that the market is respecting your analysis without knowing that the market is consolidating in a temporary daily bearish channel. The trend of the market is bullish, but this channel is a bearish channel because it's pointing down. It's pointing down. So it took that time of correction to rest from that massive bullish rally, and subsequently after that, buyers came in, the market makers came in, and they pushed the market up, break up the move, retested one, and left. It was not a coincidence. It was not a coincidence. And if we look, we have another structure backing what has happened. We have another structure in this area, very strong breaker structure. After price forming a double top like structure, and subsequently price played on that structure and leveraged on it after the breakout from the roof. It could even come back again to retest the roof completely because we have a structure at this level. The structure we have at this level is so strong that sellers could not break it. So on that level, you see price updated here, supply roof, break of a supply roof, retest, retest, break of a demand floor, no retest, price came here, retest it one, retest it two, break of a supply roof, price came here, retest it one, retest two, and left. And don't forget, before he left here, he's already a breakout from the channel. This is the roof and this is the floor. Now, let's get straight to it. I like this structure. It's an advanced structure, very, very advanced. And it's making a whole lot of sense as we're looking at it on daily. It's making a whole lot. And I will tell you what will happen next. BTC will continue to drop. Don't be angry. The reason now, let me tell you, let me just go straight to the point. This is our floor. After you clone our floor, you take our floor to the roof where market had its break before it went into consolidation. And under consolidation, price broke at the first red candle drop. It's where we are going to consider as our demand flow and we adjust our trend line. You must adjust it. Sometimes it's accurate, sometimes it's not. So in this case, it didn't match, so you have to adjust it. So we adjusted it. We adjusted it. So now we have a stronger litmus test price creating here as here becomes our supply roof and break of structure. So this is now responsible for our sell. So if you are looking for a sell, now price has broken out from the roof of the structure. After updating it with one roof two, we broke out from the structure, retested it and upstream, create a new all-time high. On that new all-time high, price have come many times to retest it. And on technical, before the retest of that current all-time high, price made a trend line that kept it buying until it met an immediate resistance. We must acknowledge that uptrend structure and use that uptrend structure as a litmus test for our buy and sell, whereby we create our roof and our floor. So, and it's also responsible for the current sell-off at the retested high. At that level, you see price created a very significant demand floor that led it to uptrend and create a new high. Price return here, demand floor, a week, traded both sides, left and right, return back here. The 2 points are giving us a reason to draw an ascending trend. And you can see the two structures. So let's put a zone to them, and they will hold our buy sentiment in order. So now you see what happened after price broke out from that demand floor that led to that current all-time high at 108.04172. If we clone that floor and place it on our roof where price has been rejected, the distance is the same, technically showing why price sold off at that level. And we can also return back to see that the reaction was actually correct. Did we see it before we do it? It is correct. So the next thing we expect from the market is that if the market uptrend speaks liquidity, it will return in the zone of around 1115, around 1115 on technical. So this is the next place where we expect. But for now, I think the market is going to take profit. And those who are responsible for this take profit are very dangerous people. You don't know the extent, you don't know the amount of money they want to take out into the crypto ecosystem. But I believe they're going to take out billions of dollars out of this market very soon. But I will not be quick to say that until I I get my facts right. And you see why price has been rejecting at this level. It's not a coincidence that price came here rejected, came here rejected, and here we have a break of structure, and at this place we also have a structure. Here we have just a supply roof, and we have here as a break of the supply roof, and a respect to the supply roof broken becomes a demand floor, and price came here retest one, retest two, respecting the principle of break and test. So what I want to see is that price return back here to show a small love. It will definitely show a small love, small, but don't be carried away by that love. Yeah, don't be carried away. So this becomes the psychological trend line, the 91 zone. So the 91 zone becomes the psychological ascending trend line acting as dynamic support. What does that mean? After break of structure, price return here to create a new all-time high. A return here created a new all-time high, and it returns again. What will it do this time? Will it break the structure or will it rebound? It is a question of watch and see. It is a matter of film. His price can return here and go back to this area, thereby taking the entire supply roof, creating a new roof, then make its way down. This is case one. Or case two is that the market has an outright breakout. But I will also look at it to see if we have other litmus tests. Or the market will just come here outrightly, break this structure. If the market breaks this structure and it wants to continue going down, we have another litmus test. Another litmus test I have here is a break of structure at this level. And at this level, you can see how quickly that the price broke out from that structure. And if you look in our line chart, you will see clearly there is a supply roof, break of supply roof, demand floor 1, demand floor 2, demand floor 3. And you can see it. And if price returns here, it will be around 80K. This will be the first turn if it managed to break the structure. So if it breaks the structure, then I want to set alarm around here. So anything around here, I'm notified that there is danger. There is danger. So we want to set alarm at this level. So if there's anything there, once price cross that area and is getting here, we need to be alarmed so that we'll see the impact, the magnitude of fall. The falling knife cannot be caught. Nobody catches a falling knife. Nobody does that. Nobody. Nobody catches a falling knife. It's going to break your account. It's going to break everything you place on it to. So we have here a typical horizontal move head price. So I'm going to take the body of the candle as a litmus test for potential upswing. So we want to see on daily close, break and close above that level for us to be sure that market want to go into 115K. It must break this roof completely. The reason for that is my price have updated here as a daily supply roof and a daily supply roof on the close of a body candle and retraced. So if it breaks above, it becomes the foundation for optic, where I will see liquidity push to 1115, 1116, and in a more critical, radical buy strategy, you could see price break away from this structure and heading into 129 into 130. These are case scenarios that cannot be doubted in the financial market. Liquidity moves markets. It is demand and supply that moves markets. So the sentiment of the market right now, there is too much caution and there is too much fear. Central bank cutting rates, inflation all time high. So everybody is looking for edge, and gold has really been a go-to. So I don't know how other Western economies, and besides, central banks do not invest in gold. I mean, they do not invest in Bitcoin. They don't do that. Only few banks do it, but the major banks like JP Morgan and the rest of all banks, US Fargo and the rest, they got nothing to do with this thing. They aren't putting money into it because it's more like a Ponzi. So but we trade it because it's tradable, and the structure is just something you can also understand if you understand structure of market. So now you see the market will continue to drop. Don't try to catch it. But one of the few things we'll do is to see when we have a breakout from a descending trend line. So if you have a breakout from a descending trend line, it becomes a confirmed sell structure. And when we look critically, you will see we have a breakout from the descending trend line, indicating that selling is imminent. Selling is imminent. We broke the structure yesterday, day before yesterday. That structure was broken on that descending trend line. We look at the candle that broke the structure on Thursday, 06. That structure was broken on Thursday. Sorry, it's on Wednesday, 05. It was broken on Wednesday, 05. And you see, market came and went again, and right now it's an outright sale. So don't if today candle closes the way I expect. In fact, the candle will continue to sell because when you look at the line chart, you will see on the line chart there's break of a demand floor. You see it actively. But let's okay, let's see, let's see. Okay, okay. No, there is no break. There is no break. Look at the line chart. We're using the body close of the daily chart. There is no break. But the market is leaning on it. It came on Monday, it came on Thursday, and it came today. And let's see how today closes and see how tomorrow closes. So if it closes below it, then we know that we might likely jump from 95 into 92 zone again. And if price returns into this level, well, you will see that a broken demand floor might decide to become a supply roof in a case like this, where price will not be able to go up again and we need to see it where come down. These are rather strong case scenario. A very strong case scenario that if that happens, so I don't want to see a breakout of that structure. It's kind and endearing to us. So if that happens, this could be the case where price will ultimately come in the zone of 79,611. So on technical, this becomes your new buy zone. The buy zone is going to come on this place. And if you see the previous in the time past, price has been buying on this zone. So it's on technical that price will return here, just like when price came to this place after the infrastructure, it has bought, and I believe it will come again to buy up. So gold has done it. I believe BTC also do things like that. The structures were scripted. And the next thing I want to see is we have a very strong daily rejection candle, and that daily rejection candle in that upswing, I want to take note of that level, believing that price in the technical return to that level. That is, let's see if we can change the color. Market. And let's give it a yellow color. We can reflect. So 83. So if price comes into 84.922, we might see some form of resistance, considering that we have a strong weak rejection after the heavy bullish rally. Price came here and found support, indicating there is a very strong order at this level. So on technical, price will come there and show us small respect. Small. It's not big, oh. It will not respect you too much. It will just break it. Just small respect at that level. We are going to get small respect at that level. And subsequently after that, come back and shatter the whole thing and continue to trade down. So it's a time, it's a moment to celebrate. We are not ruling out a potential return back into this structure because this was the last retest before price created a new order. after breaking out from the bearish descending trend line, market has leveraged on that. So that is what we see